Bitcoin is trading in the red, but over the weekend, there was buzz in the crypto community after former President Donald Trump pledged to build a strategic Bitcoin stockpile, sort of, during the Bitcoin 2024 conference in Nashville. Joining us now with a technical look at Bitcoin and other parts of the market is Jeff DeGraaf from Renaissance Macro Research. Jeff, at what price does this Bitcoin move get really interesting?
Well, I think you have to break it out through 73,000, and that's a real legitimate breakout that actually counts pretty close to 100,000 if you can break that out, not quite, right around 96,000 on the upside. So, we think it's an important measure of liquidity. We think it's part of the whole kind of infrastructure, if you will, ecosystem with speculative assets. But it is one of the keys for us, along with other credit spreads and some other measures regarding the health of this market. So we certainly are more interested in a breakout than a breakdown. And as long as it stays above 55,000, I think the path of least resistance is higher. And this will just prove to be a long consolidation in this ongoing uptrend.
Okay, well, we'll keep an eye on that one. And then also copper. You say copper is oversold at this point. Now, it was overbought for quite a while on the way up. So why is this level now significant?
Well, overbought conditions and uptrends are meaningless. It's kind of a function of the trend, right? You're always, if you're trending higher, you're going to just be perpetually overbought. So we use oversold conditions and uptrends to give us some sense as to where the likelihood of a reversal is and to re-engage in that uptrend. And we saw that over the weekend where our oscillators, which take into account volatility and some other factors, started suggesting that we were oversold enough finally to get a good buy signal in this ongoing uptrend. And I think it's important that it's not just in copper. We saw it in silver. We saw it in aluminum. We've seen it in quite a few of these metals. And frankly, we're seeing it globally in some indices, some currencies, and obviously some tech stocks as well. So at this stage of a bull market, you really have to have something special if you're going to chase something and buy a breakout or buy something at a 52-week high. We prefer to see these consolidation, these corrections and these uptrends, what we call optimal entries. And certainly copper triggered as one of those this weekend for us.
We've seen some steepening of the yield curve, I'll call it, in recent trading sessions in recent weeks. There's a lot of focus on the two-year Treasury yield specifically, especially as we go into another Fed decision this week. We know that tends to be tied to it. What are you seeing in the charts?
We've been believing that the two-year yield has been topping for a while, and we're still in that camp. It just has failed to break, so it's kind of elongated this for us. 5% is resistance. I think we're on our way to 4% pretty easily, and probably something below that if in fact we continue to see data that's weaker than what the expectations are. But certainly we're looking at this as to the downside. This is exactly what should be happening at this part of the economic cycle in our work. So it's something that we're playing for. I think it'll be interesting to see what the reaction is on the long end, right? The long end is really being driven by fiscal concerns. The short end is being driven by monetary policies. So getting some normalization of that curve, I think, is good news. And the thing to watch are banks, right? Banks tend to have a high degree of sensitivity to these rates. And so if banks, which have been doing well, if banks suddenly start to underperform around this, then I think that's a problem that's probably embedded in the curve somewhere.
And speaking of central bank decisions, we get a flurry of them this week, starting with the BOJ. We've seen that carry trade unwind here ahead of the decision from that bank and the expectation that we're going to start to see quantitative tightening. What are you seeing in those charts?
So that's just the opposite of what we're seeing in copper, right? This is what we call an optimal exit. This is an overbought condition in a downtrend. It's one of probably three that we've had over the last year and a half, and each one of those have proven to be a pretty good spot to be a seller of yen, and we're certainly in that camp here. What's interesting, and maybe a corollary that would be of more interest to your viewers, is that strength in the yen has now, in fact, pushed the Nikkei, which is the index, the equity index there, into an oversold condition. And again, just like copper, it's an oversold condition in an ongoing uptrend and looks buyable. Clearly, there's that currency conversion that you have to worry about there. But what we're seeing from the straight-out equity indices is actually a pretty good opportunity, in our view, to be a buyer of this weakness.